welcome everyone. We're really thrilled to have participants joining us from various corners of the globe, spanning different time zones. And thank you so much for making the effort to connect with us despite the geographical distances. And we have a very good turnout. I'm starting by introduce myself a little bit. My name is Ying Chen. I am Associate Professor of Economics, teaching at the New School. I study development, political economy, and focus particularly on the Global South. I will introduce my colleague later, and I'll turn the floor to her to also make some further introductory remarks. But I would like to begin by thanking the New School for Social Research Faculty Research Fund, which financially sponsored this symposium, and also to thank our institutional sponsors, including the India-China Institute at the New School, the NSSR and Land Economics Department, and the SPE and Land Global Studies Program. And particularly, I want to thank Grace Ho, who is the Deputy Director at ICI, and also Silvina Peloccio, who is the Senior Secretary at NSSR Economics, and Dong Ding, who is a graduate student at Economics Department, and also the research assistant for our project, for my co-authored project with Karina, for all the logistical support and that makes this meeting happen. And also our appreciation to the Michael at IT that is helping us setting all the webinars here. I also want to thank the two student moderators, Michael and Agnes, who will later help us co-facilitate discussion, and to thank them for agreeing to join our session at the last minute request. So the idea to organize a symposium on this topic originated from the observation of my colleague Karina Mullin and I in one of our discussions, that we started to realize the space for discussing any issue related to China has been shrinking as tensions between the US and China escalate. It appears there's a tendency to frame the discussion with only two simplistic positions, a pro-US or a pro-China stance. It leaves very little room for any nuanced analysis that engages historical and class perspectives. And when addressing the topic of the African continent, the debate is often framed as a China versus US or China versus West question. In such discussions, the African continent is portrayed as a passive recipient, seemingly incapable of making its own reasoned judgments and devoid of agency altogether. We also want to draw attention to the fact that China is increasingly vilified in the mainstream media, echoing xenophobic tropes and stereotypes from the past and paving the way for a new Cold War and a new McCarthyism. Additionally, we aim to highlight the connection between the mainstream media's hostile position towards China and the escalating anti-Asian racism in this country. And this is why we intentionally use the plural form narratives in the title of our symposium, as we are aware that nuanced analysis will yield various interpretations of the historical and political economic implications resulting from the interaction between China and the countries in the African continent. And these narratives, although all posing a direct critique to the dominant narrative parroted in the mainstream media, are distinct and sophisticated in their own ways. And they could lead to constructive discussions about alternative development path for African countries and the Global South in general. So I will now hand it over to Karina for additional introductory remarks.
Thank you so much, Ying. So every time one opens up a mainstream newspaper or many mainstream academic articles these days, we are confronted with a barrage of reductionist accounts, stereotypes, and Orientalist tropes, from narratives surrounding so-called debt trap diplomacy to accusations of pernicious extractivism, resource grabs, corrupt business practices and cultural insensitivity, it often feels like these hegemonic narratives serve as a form of projection. Western states and corporations seem eager to divert attention away from what have been their own detrimental practices on the continent for so long. Frequently absent from mainstream analyses is a comprehensive, longue durée view that could provide insight into why perceptions in the region differ. A pivotal starting point is the mid-20th century, when China, led by the Chinese Communist Party and Mao Zedong, positioned itself as a champion of anti-colonialism and anti-imperialism, helping to reverse centuries of Western domination and exploitation in the region through supporting African liberation movements during the 1950s, 60s, and 70s. Additionally, they financed infrastructure projects, opposed Western neo-colonial interventions, and provided economic and diplomatic support in international fora for nations on the African continent seeking to break free from the legacies of colonialism through import substitution and other autonomous development paths. Fast forwarding to the contemporary landscape, the African continent grapples with a mounting debt burden and growing levels of dependency due to historical legacies combined with decades of neoliberal structural adjustment. The continent's debt has doubled from 2010 to the present, with 22 African states facing debt distress or high risk. This situation poses substantial challenges to Africa's sustainable development and its ability to address the impact of the climate crisis. Connected to this are deteriorating living standards marked by escalating levels of poverty and inequality, exacerbated by the COVID health crisis and the war in Ukraine, both impacting supply chains and triggering high levels of inflation. So similar to the period following decolonization, many African scholars, popular movements, and some heads of states are contemplating how to break from the colonial capitalist model of development that led to the continent's dependency and transfer of surplus value to the capitalist core for so long. As Walter Rodney, the Guyanese political economist, explained in How Europe Underdeveloped Africa, grasping the causes of underdevelopment on the African continent requires a relational approach. Whereas much of earlier social science scholarship rested upon racist accounts, blaming poor governance and inability of African governments to manage limited resources, Rodney demonstrated that this continent, rich in human capacity and natural resources, was poor because it had been exploited for centuries by Western colonial powers that accumulated wealth at the expense of the peoples and lands of the African continent. In parallel to the 60s and 70s, many African scholars, politicians, and movements today are challenging these unequal relations and devising alternative development models and strategizing ways to break the yoke of dependence on the West. This includes ideas around delinking from the global capitalist economy, sustainable development, agrarian reform, and regional integration. While the present-day Chinese state differs from the 50s, 60s, and 70s from its 50s, 60s, and 70s incarnation, many argue that the rise of a multipolar world order with China as a central actor will benefit the yet-to-be-completed African liberation struggles, opening up policy space and providing the material means, perhaps, for alternative development projects. Despite much optimism about the alternatives presented by China today, questions linger about the role and impact of Chinese foreign direct investment, debt, and whether the Belt and Road Initiative will be capable of facilitating a break with the unequal economic, political, and material relations that have characterized Africa's dealings with the West for so long. Fortunately, we have two panels today with brilliant scholars and practitioners who will help us to critically engage and think through these questions. While they may not agree on many issues, we believe there are two areas of common ground that unite all the panelists. The first is that the reductionists is their view that the reductionist, stereotypical, and racist accounts of China and of the country's relationship with the African continent undermine scholarly analysis and our ability to accurately assess the pressing political, economic, and ecological issues that we face at the current conjuncture. Secondly, our shared goal is to achieve and support development of sustainable development of African states and economies in a manner that aligns with the needs, aspirations, and rights of the people of the African continent, rights long denied by a global order dominated by the West. Pass it back to you, Ying.
Thank you, Karina. So I'm going to start introducing the speakers for our first panel. Our first speaker is Eric Olander. Eric Olander is the co-founder of the China Global South Project, an independent, nonpartisan media initiative dedicated to exploring every facet of China's engagement in Africa. Eric is a fluent Mandarin speaker and a longtime China watcher with more than 25 years of journalism experience at many of the world's leading media companies, including CNN, the BBC, the France 24, among others. He received his undergraduate degree in East African history from the University of UC Berkeley and holds a master's degree in Chinese public affairs from the University of Hong Kong. Our second speaker for the first panel today is Fadhel Kaboub, who is Associate Professor of Economics at Denison University and the President of the Global Institute for Sustainable Prosperity. He's also a member of the Independent Expert Group on Just Transition and Development and serves as Senior Advisor with Power Shift Africa. He has recently served as Undersecretary General for Financing for Development at the Organization of Southern Cooperation in Addis Ababa, Ethiopia. Dr. Kaboub is an expert on designing public policies to enhance monetary and economic sovereignty in the Global South, build resilience, and promote equitable and sustainable prosperity. His recent work focuses on just transition, climate finance, and transforming the global trade, finance, and investment architecture. Our third speaker, Professor Hairong, is a professor of anthropology at Tsinghua Institute for Advanced Study in Humanities and Social Sciences and Department of Sociology. She researches on agrarian change and food sovereignty in China and China-Africa links. She is interested in studying labor, gender, rural-urban relations, socialism, post-socialist transformations, neoliberal capitalism. Before joining Tsinghua, she taught in Hong Kong Polytech University. And our last speaker in this panel is Professor Barry Sautman, who is Professor Emeritus of Political Science at the Hong Kong University of Science and Technology. Barry is a political scientist and a lawyer who primarily teaches international law, China-US relations, contemporary China ethnicity, and nationalism. One of his areas of research has been ethnic politics in China and a comparative perspective, including ethnic policies, the political, economic, and legal aspects of the Tibet and Xinjiang issues. He has examined the global mystification by politicians and media of these questions, as well as the issue of dissent in China. His other area is China-Africa links, including political economy, labor rights, migration between China and Africa, and interactions between Chinese and Africans, representations and perceptions of China and Chinese in Africa, and the supposed strategic rivalry between the US and China in Africa. So we intend to keep the panel more engaging for audience. So we'll ask all the speakers to speak for 7 to 9 minutes in the first round. And then we're gonna ask 2 rounds of questions to each of the speaker before opening the Q&A to audience. Okay, I'm gonna turn the floor to you, Eric.
Good. Well, thank you very much, Ying and Karina, for inviting me. It's an honor to share the stage with Hairong and Barry, who I've been following for more than a decade. And Fadhel, I'm really excited to meet you and to have a chance to better understand what your research. And what I want to do today is really, let me just get my slides all set up. And sorry, is I want to try and leave you a little more confused, less clear, and hold on, sorry, I'm getting a little technical I had this all set up perfectly when I started, so I apologize. There we go. That's what I wanted. Okay. Should be good to go now. My goal today, and I'm hoping what you're going to take away from this whole conference, is you're going to be less clear, more muddled, more confused about the China-Africa relationship, because many people come in with their minds already made up by many of the media narratives that we've heard, both on the Chinese side and on the Western side, and increasingly on the African side as well. The vast majority of these media narratives are reductive and incorrect. People get to see what they want in this relationship. If you want to see that the Chinese are the worst thing that's ever happened to Africa, there is plenty of evidence to suggest that. If you want to see that China is the best thing that's ever happened to Africa, there's plenty of evidence to suggest that as well. The fact is, this is a multifaceted, very complex, very rich relationship, which allows what I call the blind man and the elephant here, just like the parable, that you can see anything you want in it. And that's one of the reasons why it is so complex to understand. It's also very important that we make some very important distinctions between China and the Chinese. Oftentimes, these get kind of wrapped up into a single word. China is the state, which is embodied in many different ways in the China-Africa relationship, through state-owned enterprises, through diplomatic missions, through aid initiatives, through the military, all sorts of different things. There's also a very vibrant Chinese civil society in Africa as well that has nothing to do with the government, and it is totally and wholly distinct. In the eyes of many people, these are singular, and that is a mistake. And so I think in our discussion today, as what I'm going to try and do is kind of do a little bit of a scene setting for the rest of the speakers today in terms of laying the foundation for some of the context of what the China-Africa relationship looks like. Economically speaking, Africa is not important to China at all, in the least. China is the largest trading power in the world. It does almost $7 trillion of global trade every year. Africa is at the very bottom with $282 billion of trade last year. This number is actually, when measured against the growth of total China global trade, which has been expanding, Africa trade is flat or declining in relative terms, even though in absolute terms, it's going up. The other thing is that China's trade with Africa is highly distorted. It is disproportionately concentrated in 5 countries, mostly extraction countries. And so I think this is really very important to remember, that the vast majority of African countries import quite a bit from China, but sell very little back. It's a highly imbalanced trade relationship when you look at it on the national level. It's really a distortion to even look at China-Africa trade, because in virtually no other context do we compare a continent to a single country. And I'd be happy to share these slides, because I'm going to go quite quickly in order to make sure that my time is, I just respect the time. But when we look at, in terms of exports from Africa to China, 2/3 come from just 3 countries. And that is really, really important. When we look at the imports, they are primarily going to the largest countries, Nigeria accounting for a very sizable share of that. So again, this is not necessarily a very healthy trading relationship. When you look at Kenya, for example, $3.9 billion worth of imports, less than $200 million worth of exports. This is in many cases what it looks like across the continent. So again, when we talk about the China-Africa trade relationship, it is one that is very important to some African countries. It is one that accounts for less than 4% of China's total global trade, and is one that is flat overall. Let's quickly talk about debt, because this is a major topic of discussion that shapes the narratives. I just need to be as blunt as I possibly can be. Africa does not have a Chinese debt problem. And this is going to come as a major surprise to a lot of people who follow mainstream narratives. Only 12% of Africa's total public external debt is owed to Chinese creditors. Now, when we look at the data, and this is from Debt Justice, an NGO in UK, but it has been done by a number of scholars, including Deborah Browdegum at Johns Hopkins, including Kevin Gallagher at Boston University. The list goes on. what we see over and over again is that Africa's debt problem is a private creditor debt problem, mostly in Euro bonds, more than it is a Chinese debt problem. You would not know that listening to Janet Yellen, listening to Antony Blinken, listening to any number of people who will say that it's the Chinese who are the primary problem. When we look at not only the amount of private creditor debt, but then look at also the average interest rates there in the far right column, you will see that the private creditor debt is almost twice as high as the Chinese debt. You will also see that the repayment terms on private creditor debt is much shorter. And you will find that in the research, and this is just the data, that the Chinese have been restructuring more and more of the debt in Africa and in many global South countries, and private creditors have yet to budge at all. So when we talk about Africa, again, about 10 countries have a Chinese debt issue, okay? Now, when we look at the totality of Chinese debt in Africa, almost a third is in one country alone, which is in Angola, which dates back to the original resource for infrastructure deal. But when we look at the rest of the continent, the share of the total public debt in those top 10 countries that have a Chinese debt issue, it becomes even smaller. So let's take a look at Nigeria. Out of $100 billion of total public debt today, the Chinese account for 3.24 billion, according to the Debt Management Office. That's about 3%, obviously. In Kenya, it's less than 10%, and in Ghana, it's about 7%. This is not the problem. And that is the reason why, on the record, you do not hear any African president or prime minister publicly complaining about the Chinese debt. What we do hear is them complaining about multilateral debt and also private creditor debt. So I think this is really important. And when you look at the mosaic of debt that these countries have, you'll see that the Chinese share is large when measured against bilateral external, but small when measured against the whole. That context really, really matters. I don't know what else to say. Anybody who's been listening to our show, anybody who's been following us, the research is absolutely clear. The debt trap narrative is something that started in India in 2017 by Brahma Chelani. It has captured the imagination of senior American and European elites. The State Department does not use this narrative anymore. It has been debunked by Boston University, Johns Hopkins University, Chatham House, the Isaiah Yusof Ishaq Center here in Southeast Asia. The list of Western and international universities, think tanks, and scholars that have debunked the debt trap is long. If you go to the first page of a Google search, it's all there. And so the continued use of the debt trap narrative, which Joe Biden just did 2 weeks ago when talking to Latin American leaders, has now kind of transitioned from being maybe a mistake that they don't understand, they haven't gotten the latest data, to willful disinformation at this point, because when something is available on the first page of a Google search on China debt trap and it's continued to be used, I don't know what else to say. So this is just a very simple kind of statement. When we look at FDI, there's a mistake that a lot of people think that China is the largest investor in Africa. This is the newest data that just came out this month from Ernst & Young. Very important. China's share of FDI fell sharply, and it's going down. And China really has never been the largest investor in Africa. Many people confuse the loans with investment. These are two very, very different things. Africa is not a major investment destination for the Chinese. Here in Southeast Asia, it is. And it's falling, as you can see. So the trade relationship is anemic. The investment relationship is anemic. And the downward trend is pretty evident. But I encourage you to look at what Ernst & Young is doing. The traditional colonial powers remain and have always been the largest investors in Africa, and the U.S. as well. And then again, that is a narrative that a lot of people don't understand. When we look at mining, again, a lot of people make an assumption that because Chinese mining interests spread across the continent, that China is one of the major extractive countries in the mining sector. Yet the data, again, tells us a very different story. many people are surprised that the cumulative total of all Chinese mining in Africa accounts for 6.7% of total output of mining in Africa. When we look at Anglo-American, one company is twice as much as this. Chinese mining interests tend to be highly concentrated in a few countries: South Africa, the DRC, Guinea, and to some extent Nigeria, but not anywhere near as those others. And they are much, much smaller when compared to the Dutch, British, American, and the European and the European companies. And this, again, is a surprise for a lot of people. Now let's talk about labor, because you've got some of the best experts in the world on Chinese labor in Africa who are participating in this conference. This continues to be a major talking point of the United States, and one that does need to be debunked. Hairong and Barry are some of the OGs in doing this research. Carlos Oya at University of London has done some of the benchmark research on this as well. This is a little bit like the debt trap, where the data is there. It's very easy that it's there. You continue to hear people like Antony Blinken, who continue to say that the Chinese are bringing labor into Africa, which is a preposterous statement on its own. If anybody knows anything about China, you know the one problem that they have more than anything is a demographic time bomb that's kind of bearing down on them. There is not a pool of surplus labor in China that is waiting to come to Africa to work in mines and factories. So it just doesn't make a lot of sense on the surface. But this is from Carlos Oya and Wei Chen's research from 2021, I think it is, where they found that in Ethiopia and Angola, the local labor content was 90%, 100% for low skilled. They have spent the time looking at this. And again, this mirrors other data points that we've seen from other scholars as well. The Chinese, when they first came to Africa in the early 2000s, did bring some of their labor because they were new, but they quickly then adapted and started to hire locally. And now most of the labor, as we're seeing from the research, is hired locally. In Southeast Asia, it's a different story. It's a different dynamic here, where there's more Chinese labor, but in Africa, that is not the case. And I want to bring up some research that was done by Barry and Hairong many years ago, just to kind of point out that this phenomena is not a new phenomena. We're looking at local labor going all the way back to the 2010s, that this was the case. So again, like the debt trap, like the mining, like the FDI, like the trade issues, the fact that so many people come to conclusions without actually studying the data is something that I find rather disheartening. And when we look at Chinese labor in Africa as a whole, it peaked in 2015 and has been steadily declining since then and has not picked up again. And so ultimately what we're looking at is China economically, in many ways, disengaging from Africa. And I always warned my African friends that your problem wasn't going to be that China was ever going to colonize Africa. Your problem was going to be that China loses interest in Africa. And in a pure economic sense, that is what we are seeing. However, in a political sense, Africa remains immensely important to China. And that continues to be the case, particularly in this era of great power competition. So I think I made my time, but I just want to leave it right there for now, but just give you guys some data points to start our discussion in this whole session for the rest of the couple hours that we're doing.
Thank you so much, Eric. Thank you so much for the very thought-provoking discussion, which is so rich in data, and I think really helped debunk a lot of the myth. So if people haven't got a chance to listen to Eric's show, you're highly recommended to so. I listen to it all the time. It's really fantastic. I also wanted to remind the audience that you should feel free to start using the Q&A function to send questions if you have any. We will be selecting questions from the audience after 2 rounds of Q&A directly directed towards the speakers in the last round, but you should feel free to start writing out questions now. So our next speaker is Professor Fadhel Kaboub. I'm gonna turn the floor to you. Thank you.
Thank you so much for the kind invitation and for hosting this wonderful conversation. I'm going to go ahead and share my slides, and we'll get started right away. So I'm asking a very simple question. I'm coming into this conversation from an African perspective more than as a China expert. So can China-Africa partnerships lead to structural transformation on this continent? And I'd like to present the African side, what should be the African side of the equation, which is a Pan-African vision for sustainable prosperity. So a lot of my comments reflected here are from a recent report that I had the pleasure of co-authoring with a group of independent experts on just transition and development, a group that was convened by Dr. Yuba Sekuna, who's the outgoing vice chair of the IPCC from Mali. And I'm going to drop the link in the chat. It's available in English and in French. Actually, I don't have the link, but it's justtransitionafrica.org. The main message from this report, which is relevant to our conversation, is that we need to, end the silos when it comes to discussions about climate policies, energy policies, and development policies. And ending the silo has to come from the African side to begin focusing on simultaneous, coherent, comprehensive approach to development, to energy, to climate, and I would add to debt as well. A key message that I think will be relevant to this conversation is the importance of having a long-term strategic vision. When you look at the geopolitics of the world today, there's clearly three major players. There's China, there's the US, there's Europe. Each one of these blocks has long-term strategic visions for itself. I'm talking 100 years forward in terms of its economic role, military, geostrategic role, and so on. And every economic bloc has every right to have a vision for itself and has every right to use economic diplomacy and incentives to nudge everybody else to where they want to see them on that map. The thing is, it's very important for us as Africans to have a long-term strategic vision for ourselves. Because if you don't have a vision for yourself, I guarantee you're already part of somebody else's strategic vision. And unfortunately, this is the role that Africa in particular has played during colonial times and even post-colonial times. And of course, this can't be the role that Africa plays moving forward. So the perception or the role that was imposed on Africa is that we're the place for cheap raw materials for the global north. We're the dumping ground of global north industrial output for a large consumer market. We're the low-cost tourist destination, and we call that development, even though it's a structural trap, actually. And then finally, we're perceived as the dumping ground for obsolete technologies, assembly line manufacturing that is no longer needed in the global north, is outsourced to the continent, and it's called development and industrialization. But what it does is that it locks the continent and the rest of the global south, for that matter, at the bottom of the global value chain. So no matter how much you double, quadruple your exports and your trade, you're always locked at the bottom of the global value chain, and that's the source actually for a debt trap. Another important message I'd like to deliver here, and that's general. You can't decarbonize a system that hasn't been decolonized yet, and we're just starting the COP conference this week. You can't democratize a system that hasn't been structurally, economically decolonized yet. And similarly, you can't de-dollarize a system that hasn't been structurally, economically decolonized yet. And I'll show you the numbers and I'll explain what I mean by that decolonization. And it's not that you have to decolonize first, then you decarbonize. No, it's a simultaneous process, but you can't ignore the structural issues. You can't use the existing engines of economic development, the engines that produce poverty and inequality and pollution, and accelerate them and hope for better results or different results. You have to transform those engines. So the engagement that I'm having in this presentation is what is the kind of China-Africa partnership that can bring about that decolonization, that can bring about that structural transformation. And bringing that to the table is Africa's responsibility. It's not China's responsibility to come to Africa and decolonize its economic structures. We have to have our own coherent, comprehensive vision for what that structural decolonization is. And the opportunity to partner with China is certainly there, but it's not going to come as a gift. So the structural deficiencies that we deal with, of course, everybody's concerned about the high external debt. But to me, that is actually a symptom of the deeper structural issues. And these are the three major root causes for external debt on the African continent, the global south in general. Number one, energy deficits. Number two, food deficits. And number two, industrialization or manufacturing deficits, the fact that we specialize in low value added manufacturing. And when I say energy deficits, I include a country like Nigeria, which is the biggest exporter of oil on the continent. But today, Nigeria imports 100% of its gasoline, not by accident, by design. Food deficits, according to UNCTAD, 85%. Africa imports 85% of its food, not by accident, by design. These are the rules of international trade. This is the common agricultural policy of the EU and the trade, agricultural policies of the US and the rest of the global north since the 1960s. And the industrialization deficit is the fact that we were forced to specialize in a kind of manufacturing where it's a process where you have to import the machinery, you import the intermediate components to assemble, you import the fuel to power the factories, you import even the packaging, and we use low-cost labor racing to the bottom. So what we import is high value-added content. What we export is low value-added content. You can double, triple, quadruple your exports. You're never getting out of that bottom of the global value chain. And of course, the structural solutions are right there. It's investments in energy sovereignty and food sovereignty and high value-added manufacturing, a different kind of industrialization. So what these structural traps do is that they create an annual trade deficit, a structural trade deficit, which, as you know, weakens your currency relative to the dollar or the euro. And with the weaker currency, anything you buy the next morning is going to be more expensive. You import food or fuel, you're importing inflation. And as a result, that puts our governments in a defensive position immediately to protect the most vulnerable. So we do two things. We subsidize food and fuel and pharmaceutical products to protect the most vulnerable, but we also ask our central banks to defend the exchange rate. And the only way to stabilize or defend the exchange rate is to borrow more dollars. And that's the band-aid solution that they pursue. The long-term defending the value of the currency and defending the sovereignty of your economy is investing in these structural transformations on the energy front, on the food front, and on the manufacturing front. I'll show you the picture on a global scale. If you divide the world into global north and global south and net out global financial transactions, that's the green line there. And that green line, the last data point we have, is $2 trillion moving from the global south to the global north. That's money moving in the wrong direction. And when you put that in the context of climate finance, the discussion of this week, for example, you have $2 trillion moving in the wrong direction. You have $100 billion promised 15 years ago and not delivered. Whatever was delivered was loans to add to our debt trap. You have the Green Climate Fund, which barely has $12 billion the last time I checked. And then you have the Loss and Damage Fund, which I should update. It's not zero anymore. It's much, much bigger than zero. The United States pledged $17.5 million, million with an M, not with a B, not with a T. And Germany pledged 100, I think, and the UK pledged 40 million. Japan pledged 10 million. So we're still talking crumbs when the global trade investment financial architecture is sucking $2 trillion a year from the global south and accelerating. So that is the reality of this neo-colonial extractive system that we're dealing with. So for us to engage in any conversation about transformation, we have to transform these suction mechanisms that extract resources and wealth from the global south. Very quickly, just to eyeball the problem with some of this data, this is Africa as a whole. You can eyeball our exports as a continent. Notice the number is 585 billion. Notice the composition, it's raw materials and cash crops rather than core crops, and assembly line manufacturing. Now look at Africa's imports. The volume is 737 billion. That's the structural trade deficit. And notice our imports are much more sophisticated, high value-added products, refined petrochemicals, not raw materials, and pharmaceuticals, and of course, a lot of core crops like wheat and rice and corn and so on. I'll give you an example of just one country, but I can show you all the continent, essentially. This is Ghana's exports, 25 billion. You can eyeball the problem right there. It's raw materials and cash crops. And you can see Ghana's imports, 27 billion. So we have a structural trade deficit, and you can see the composition of Ghana's imports, of course. And that creates this constant pressure on Ghana's exchange rate. So notice the currency is weakening relative to the dollar. The line is going up, that's the dollar becoming more expensive. And it's not a new phenomenon. This is not COVID or Ukraine conflict. This is going on for decades. And of course, the flip side of it is Ghana's external debt, which is increasing exponentially. Again, not recent years. This is, I can show you country after country, the picture is essentially the same. So the structural solutions are right there. Investments in food sovereignty and agroecology, renewable energy sovereignty, not for export, but for deployment on the continent. Notice when I say food sovereignty, I don't mean food security. Food security is a colonial construct that led to the level of food insecurity that we actually have here. And then, of course, Pan-African industrial policies that leverage the complementarity of our resources and capabilities on this continent, including the strategic minerals, the large market demand that we have. Again, not to export clean energy, but to deliver to the 600 million people on this continent who have no access to electricity, to deliver clean cooking technology to the 970 million people who are inhaling toxic fumes on a daily basis on this continent, mostly women and children. And that's an industrialization opportunity because that's a manufacturing opportunity. And of course, green transportation, and I'll show you a couple of things. And of course, we can't ignore this global financial architecture that was not designed by us, not designed for us. It's not going to be the same architecture that will deliver justice or equity to us today. And that's why it's very important not to ignore these conversations about redesigning, restructuring the global trade, investment, and taxation architecture. I'll emphasize why it's important for industrial policies to be Pan-African and to be South-South strategic partnerships, because to industrialize, you need economies of scale, you need large markets. And in today's global trade system, you're not going to be able to compete in the global economy. You have to create regional markets on the African continent where you can reach economies of scale, which allow you to reduce the cost per unit, improve efficiency, and so on. You have the complementarity of our resources and capabilities. What we may lack is the manufacturing capability. This is where you take your collective bargaining chip as an African continent and go look for partners using economic diplomacy. You can partner with China, you can partner with Germany, with the US, like many of our independence leaders on this continent used to say, friends of all, enemies of none. And Mia Motley today of Barbados also says, friends of all, satellites of none. And that's the approach that you use to build partnerships, as in partners, not as in neocolonial abusers. And this is how you leverage the strategic resources that you have. You build the horizontal linkages, which are critical for industrialization, and you focus on priorities rather than exports. So you prioritize food sovereignty, renewable energy sovereignty, water security, education, training, transportation, and health, and so on. And this is how you can acquire a higher degree of economic and monetary sovereignty. Sovereignty is not something you declare by decree. It's something that you acquire with strategic investments and partnerships. And if you like this basic level of resilience, you have no bargaining chips, whether it's debt negotiation or trade negotiation. You can't even walk away from a negotiation table because you have no plan B, essentially. And this is just quickly to show you the massive renewable energy potential that we have on this continent. This is to show you the massive industrialization potential that we have to build a high-speed rail system on the continent to connect our economies, not importing the infrastructure, but manufacturing and deploying the infrastructure on the continent. This is the kind of transformation we need. And to conclude, the time to act is now. The crises that we're dealing with require bold, urgent, and radical action. And I don't mean radical in the political sense. I mean radical in the literal sense of the term, as in going to the roots of the problem. And somebody like Martin Luther King Jr. was a radical in the sense that his famous line where he says, "I have no time for the tranquilizing drugs of gradualism and incrementalism." That's the sense in which I mean radical transformation, because the current policies are ineffective, expensive, too weak, too slow, and as a result, dangerous, given the types of crises we're dealing with. And I truly believe that the realistic plan for restructuring the for structural transformation and decolonization requires this fundamental restructuring of the global economic architecture that I described. And this Pan-African transformative vision that I'm laying out here, that we lay out in the Just Transition report, I truly believe is possible, desirable, and affordable. And this is all from an African perspective. So now developing our own coherent vision for transformation and going to a country like China for actual partnership on reasonable terms, on equitable terms, on transformative terms, that's our responsibility. It's not going to come as part of the BRI program from China, and it's certainly not going to come from the EU. It's certainly not going to come from the US. The EU is probably going to announce in a few days during COP that they have a clean cooking plan for Africa. But if you look at it, it's actually an industrialization plan for Africa to deliver clean cooking technology manufactured in Europe, jobs created in Europe, but with loans to finance the purchases of the clean cooking infrastructure to guarantee that we're locked in the bottom of the value chain again in the clean cooking business, and the fact that we will be trapped again in a debt cycle for delivering clean cooking technology. So this is as a way of opening the conversation from an African perspective. Thank you again.
Thank you so much. Thank you so much, Fadhel. Thank you for demonstrating the structural trap that Africa is now stuck in, and for showing us that the only way out is for some radical transformation, for structural transformation. And I also really appreciate that you highlight the significant role that the African continent should be playing, instead of thinking of this transformation process as a gift from the others. I think this is really consistent with what we are trying to deliver here today, the agency question. And also thank you for showing this potential for Pan-Africa transformative vision. I think all your data really tells a lot about this. And I'm sure there are a lot of questions and comments following on this topic, but we're gonna save it until we finish the first round of discussion from all speakers. So we're gonna now give the floor to the next speaker, Professor Yang Hairong.
Okay, Barry is gonna speak first. We're gonna co-present on this.
Okay, please.
Thanks. I'm very pleased to be here with you. And we are going to be presenting a kind of case study about the relationship between China and Ethiopia. Obviously, Ethiopia is a key country in Africa, and it's a key country in the China's Belt and Road Initiative, Idailu. So we will go very quickly through a bunch of slides about this case study. And well, China's Belt and Road Initiative was designed to increase connectivity, trade, and overall development through both hard and soft infrastructure, and it's generated a polarized assessment of its motivations and impact. The BRI was operationalized only 8 years ago. By 2022, China had signed over 200 cooperation agreements under the framework of the BRI with more than 140 countries and 30 international organizations. Some 84% of Chinese investment in BRI countries went to these 4 regions: East Asia, West Asia, Sub-Saharan Africa, which as you can see is 21%, and the Arab Middle East and North Africa, 14%. But the participation levels for various states varies quite a bit from encompassing to nominal. Claims in the West about the BRI are principally that it enables China's strategic domination while pushing countries into debt traps through white elephant projects. And the BRI also allegedly facilitates China's resource grab and labor exports. There have been case studies of key BRI developing countries, and these can move us beyond rhetoric to uncover country dynamics that affect the selection, implementation, and overall success of BRI projects. For Ethiopia, where principally concerned about issues such as the agency of the Ethiopian government in dealing with China. Now, China does expect economic benefit and political support from BRI countries, but it cannot require it. It's not in the position to do that. For example, Turkey is a BRI country, but it has in the past harshly criticized the Chinese government about its policies toward the Uyghur minority in Xinjiang. Unlike the US, China cannot sanction disobliging developing countries through lawsuits, embargoes, not to speak of forcible regime change or invasions, as the US has often practiced. The BRI is an informal pledge that the Chinese state will not discourage outbound foreign direct investment or infrastructure building in developing countries, even when it sometimes curbs capital exports to developed countries, as it has in recent years, and you can see the numbers. As for China's flow to Ethiopia in 2019, it was only about $2.5 billion in 147 new ventures, which accounted for 60% of all the new projects in Ethiopia coming from foreign sources. All of Africa received $38 billion in FDI in 2020, with $3 billion coming from China. Yet in 2020 H1, the first half of 2020 alone, 41 new Chinese projects were started in Ethiopia. They had capital of over $2 billion, and they were slated to create about 10,000 new jobs. Well, Ethiopia is a key case for gauging what the BRI is and what it isn't, as many Chinese see it as a model for South-South cooperation and for the BRI. The Ethiopian case indicates that the BRI is not an original transformative development paradigm, but neither is it a strategy for economic predation and geopolitical aggrandizement. Here's a map which shows the BRI's corridors. Well, in the last 4 decades, Ethiopia has had its share of problems. It's had famines, droughts, interstate conflict. Since 1991, it has essentially been a single-party state ruled by a party of 9 million members. It was the Ethiopian People's Revolutionary Democratic Front. It is now the Prosperity Party. Its purchasing power parity, GDP per capita, rose from $650 US in the 1990s to 2,300 or so in 2019. The Human Development Index, life expectancy, and expected years of schooling have also increased significantly, but very many problems remain. Well, some of these problems are, of course, poverty and food shortages, the growth of inequality, joblessness, inflation, and corruption at a high level. The International Monetary Fund puts the debt to GDP ratio at 59%, which is high, but not outlandish. In recent years, export revenues have fallen, while capital flight and foreign exchange shortages grew. Well, Chinese infrastructure builders have found that the Ethiopian government presents some problems. Chinese firms are reluctant to buy into SOEs that the Ethiopian government now wants to sell. Chinese companies are also now involved in fewer large infrastructure projects in Ethiopia than they were in the past. Chinese manufacturers in Ethiopia complain a lot about arbitrary tax rules and foreign exchange shortages. Well, the ruling party in Ethiopia has strong ties with the Chinese Communist Party, and it has a similar apparatus. Ethiopia supports China on core interests, particularly territorial issues in international organizations. But Ethiopia's strong ruling party and its long tradition of independent action means that China lacks any determinative political influence in the country. And the US is actually more influential politically and militarily in Ethiopia than is China. At least that was the case up until the Ethiopian Civil War of November 2020 to November 2022. So in 2021, in the middle of that war, the US imposed sanctions on Ethiopia's leaders. And of course, the relationship between those two countries is now not as friendly as it was in the past. Well, in 2018, there were 5 industrial parks in Ethiopia that were operational, and 6 more Chinese-built industrial parks were added in 2019. 7 of these industrial parks are run by Chinese companies, but other industrial parks are run by the Ethiopian government. Naturally, the Ethiopian government has oversight with respect to the Chinese industrial parks. And in fact, the very first Chinese-run industrial park in Ethiopia created something of a model for all the other industrial parks to come. Well, Chinese firms in Ethiopia do a variety of productive activities involving textiles, garments, footwear, but also construction materials, auto assembly, and parts production, and food processing. So by and large, this is the low value added industrialization that was spoken about by our last speaker, but it's not entirely that. Well, 70% of Chinese firms in Ethiopia are privately owned. Chinese firms in 2017 employed 110,000 Ethiopians, about half of whom were permanent workers and half of whom were temporary. Workforces at most Chinese firms were between 80% and 99% local. And here's a chart displaying the rate of workforce localization at some industrial parks and some other enterprises that Chinese have been involved in Ethiopia. And here we compare monthly wages in enterprises in Ethiopia run by various foreign companies, including both Western companies, companies coming from the global south besides China, and Chinese-run companies. And as you can see, wages are extremely low. There is a high degree of labor exploitation by all concerned. But the idea that Chinese companies pay especially low wages is just confirmed by this data. Well, the stock of Chinese FDI in Ethiopia in 2018 was about $4 billion, a fairly large increase from 2015. But in all of Ethiopia, a country that has about 130 million people, there are only about 50,000 Chinese. Chinese have built 70% of Ethiopia's new roads, plus dams, wind farms, natural gas pipeline, the Addis-Djibouti Railway, the light railway system in Addis, etc. From 2000 to 2018, China loaned Ethiopia somewhere between 12 and 13 billion US dollars. 65% of that went for energy projects, 27% for transport projects. And that's out of Ethiopia's total external debt of 29 billion. And here are some infrastructure loans from China to Ethiopia. And you can see what the rate of interest is and the grace periods and periods for repayment, which are, of course, much longer than the periods that of repayment for commercial loans to African entities. And here's Chinese shoe factory. Well, our field work found Ethiopians do have some complaints about the Chinese presence. And these include that some Chinese consumer products are of low quality, and that's because they're also very cheap. Chinese outbid locals on construction projects, and some private Chinese firms are involved in bribery of Ethiopian officials.
Okay, Barry, I'll take it over from here.
Okay.
Right. Similarly, we also find complaints about from Ethiopians about Chinese. Some Chinese have poor language skills, and also Chinese work pace is too intense, and also Chinese pay low wages. But as we have shown, in fact, they pay a bit more than local employers, and about the same as some of the Western firms pay in the same sectors. Chinese government now very closely regulates or curtails outbound foreign direct investment to developed countries. We had some slides earlier about the data, but it cannot easily tamp down the flow of investment to BRI states, especially in Africa, and even less to key countries like Ethiopia. So China must encourage investment there as because Ethiopia is very important for Chinese contribution to least developed country industrialization. So Ethiopia is seen as a hub and experiment also for industrialization. So in a sense, the BRI has emerged as a generalization from Ethiopia's success story, but it's also exaggeration in some sense because Ethiopia has certain quote-unquote advantages that other least developed countries do not have. For example, it was not colonized, it was not neoliberalized, it has a large population and it's fairly stable until recently, and the labor cost is low and highly trainable, etc. It's well recognized that Chinese are Ethiopia's preeminent builders of the infrastructure, and that its predicates of industrialization and also its main investor in manufacturing. So even though BRI provides no added value to Ethiopia beyond the links that already existed before the BRI, Ethiopia as a model country will still add value to the BRI today. But the BRI, in fact, provides added value. The data supplied to us by Ethiopian Investment Commission on all investment projects from 1992 to 2018 actually shows that Chinese have the largest number of projects in the country, in Ethiopia, and also largest number of manufacturing projects in Ethiopia. The number of Chinese projects and amount of capital investment in Chinese projects have both risen sharply since 2013, especially since 2015, since the BRI become operationalized. In the meantime, investments from other countries to Ethiopia have stagnated or declined. So most Ethiopians, though, however, have not heard of the BRI when we talk to them. But Ethiopian officials we interviewed have found the discourse or talk about BRI quite useful. Scholars we have interviewed have a balanced view of the Chinese presence in the country. They criticize aspects of it, but also praise Chinese manufacturing and infrastructure building, and they see Chinese approach to economic matters as a bit better for Ethiopia than the Western approach. So here are some of the quotes from our interview. And this is from a professor from Addis Ababa University, development specialist. And he said, Europeans have been in Ethiopia for more than 100 years, and not a single building or road has been constructed by Europeans here, and Chinese have built a lot in Ethiopia. Europeans do not teach people how to fish, but Chinese do. And had Ethiopians taught us how to fish, today we might be like South Korea. And from the countryside, and that's what I've heard researching and talking to rural people. For China, especially since 1998, things are different. 80 to 90% of Ethiopians are positive about China. We've had China here for about 10 years, and China has done more in 10 years than what Europeans have done in over 100 years. And here is another quote from Ethiopian Chamber of Commerce. He's the head of it. China is the best partner for Ethiopia compared to other countries. There are no demands on us from Chinese. There is mutual benefit, no preconditions, and we're equal partners. But infrastructure building is not enough, and we need to strengthen the partnership by shifting from light to heavy industry. And now we need more technology transfer. Here is an interview from Professor, again, from University of Addis Ababa, and he's a geographer. The West has helped Africa during disasters, but shies away from developing Africa. Perhaps they just want to keep Africa as a supply base of raw materials. China is not like the West that interferes in Ethiopian domestic affairs when they provide aid. China has unprecedented presence in Africa. A lot of what can be questioned is not being questioned. But then for ordinary people, politics is secondary, while economic development is more fundamental. China has a pragmatic approach on the ground, especially in infrastructure and industrial parks, are highly encouraging. And this is the interview from the head of the Investment Commission. We have had big increase in manufacturing investment. If our country is to be the top manufacturer in Africa, we cannot succeed without China's help. We are working to leverage the BRI, position ourselves as the most favorable place in Africa. What Western media is claiming is completely ideological. For example, the claims that Chinese are in Africa just to get natural resources, but we have no Chinese companies doing mining here. So as you can see that a lot of the Ethiopian scholars and also government officials have high expectations of the roles that China can play and the kind of partnership that can be forged. However, from the Chinese side, some Chinese managers are concerned only with their operations, not about the BRI. And other Chinese business people think about the BRI is very important and helpful to them. So they are quite, one could say, opportunistic about the BRI. And some site-specific help, for example, subsidies to scout out opportunities, low-interest Chinese state loans, and the BRI as attraction for Chinese specialist employees, and the BRI as a tie to Ethiopian government. So some of them point these out as being helpful to them. I'm concluding. So Ethiopia case, empirically, this confirms all the aspects of the earlier, when we're talking about the negative narrative of the BRI. So BRI is not a debt trap. That's also, Eric has done a lot of, earlier in his presentation has done that as well. It's not a debt trap. It's not a creator of white elephant that is building projects that's expensive and useless. It's not a tool for political domination or device for employing only Chinese and being super exploiting local workers. So it's not any of these. The negative narrative of the BRI will persist, however, as also being shown earlier by Eric, if it is not recognized as a politically motivated conspiracy theory. We also have added information, sort of update on the current situation in Ethiopia, but that basically concludes our presentation. Thank you.
Thank you so much. Thank you, Barry, and thank you, Hairong. I think it really follows nicely after Eric's broad view of all the myth and Fadhel's presentation of a Pan-African vision, and you two really help us to delve deep into a case study with all the firsthand data from the field work. So I'm sure there are a lot of questions from the audience also as well, but we are going to start the first round of question. And I'm going to introduce our student moderator, Michael Kaboub, who is going to help co-moderate the discussion. Michael Kaboub is an outstanding student at Eugene Land College at the New School, currently studying economics as his major. He is currently also a participant in the Dean's Honor Symposium, a policy debate semi-finalist, and the 2021 Overseas Military Youth of the Year. He was raised in Ghana, Germany, and the United States, and shares a strong passion for climate justice, sustainable African development, and economic growth. And Michael, the floor is yours.
All right. First of all, I would just like to preface with saying thank you to all the speakers and everyone that helped organize this webinar. But we will get straight to the questions. The first question is for Mr. Fadhel. What could be China's role in transforming the Western-dominated global financial architecture that has facilitated the neo-colonial wealth drain you discussed? Do you think the BRICS project has that potential, or would it have to be something else? Are Western reparations a necessary component for structural solutions that you discussed: food sovereignty, renewable energy sovereignty, high value added industrial policies?
Thank you. Thank you, Michael, for very, very important question. So for a long time, there was this discussion about the importance of reforming the global financial architecture and hoping that the World Bank and the IMF somehow will give up their power, or somehow the US will give up its veto power within those institutions. I don't think those efforts are leading us anywhere. Of course, we should continue to fight for that transformation. But I think the real opportunity for the Global South today is to build parallel structures in the financial system and parallel trade infrastructure. And the logistics for it, not just trade agreements, but actually building the alternative logistics, the alternative payment system, the alternative financial system, the alternative financial mechanisms, multilateral development banks. A lot of it is happening via BRICS, but the question I'm still pondering is, based on the presentation that I gave today, does the BRICS have that transformative vision, or is it also falling into the trap of mercantilism, of let's just play this game better than everybody else? And I think that tends to be still part of the approach that BRICS has. Now, BRICS, of course, has the potential to change direction and to be truly that alternative parallel structure that would be resilient and prosperous, and that would simultaneously force the existing international financial architecture either to disappear or to transform itself if it's going to be relevant moving forward. So very briefly, that is my take on this. On reparations, and this is relevant because of the context of the climate negotiations that we're having now. It's unfortunately the fact that Africa and the Global South in general have given up on the concept of climate reparations to begin with, and not to forget also the concept of colonial reparations. But on the climate front, we haven't caused this climate change. We're on the front line of climate change. The data is very clear from the Industrial Revolution to today, who's actually responsible for CO2 emissions, for climate damage, and who is responsible for repairing the damage, countries that have exceeded their carbon budget. And we go to COP28, and we essentially, since yesterday, we hear insult after insult. The countries that caused the damage are saying we'll contribute $17 million, $40 million. Today, France announced $100 million with conditionalities to be it's like, I caused damage and I'm responsible for compensating you, and then I compensate you with conditionalities that are imposed to keep you in the same economic trap, essentially. So it's incumbent on us, Africans and people of the Global South, our leaders in the Global South, to reject this BS and to call them out and to unite as a bloc to move forward in these negotiations. The reason why we successfully got the loss and damage fund last year is because the Global South in the last minute united and did one big push and said we were not leaving these negotiations without a loss and damage fund. And I think the same kind of unity needs to continue in this context, in the COP negotiations, but also in other fora. We've seen this in New York last week with the UN Tax Convention, which only came into effect because the Africa group united as one bloc and brought together the rest of the G77 and China. And when you look at the vote, who voted against a fair international tax system? All the European countries, the United States, and the tax havens. So it's very clear that when we unite with a coherent, set of demands and we push, we get results. So we have to build on this momentum that we have. And it has to be a momentum based on a long-term strategic vision for transformation, not to escape from one trap and fall into another. Thank you.
Thank you for that response. And that's actually very perfect. And obviously the other speakers are definitely, we would like to hear you guys chime in if you have any other comments. But this, you've been talking a lot about the need for unity, and especially from the government position, from the higher top. There seems to be this is from a question from Jeanette. There seems to be a problem with the idea that under the conditions of the 21st century capitalist world economy, industrialization is still possible for the global South. It sounds like a neo-Ricardian approach to development, something Latin American developmentalist nationalist states tested decades ago and proved a massive failure. Neo-Ricardian development does not break the class alliances that sustain unequal exchange relations, but simply forces a reorientation of such alliances. How can we even think about a sovereign neo-development project without breaking the national class alliances that sustain an equal exchange? Because it seems that you don't go that far, but you call for something almost there.
Oh, is this a question for me or for everybody?
It is a question. It is a,
I want to give everybody else.
Sorry, I apologize.
Oh, okay.
No.
Sure, very briefly. Yes, very briefly, but also want to give the floor to my colleagues also to comment, but because I think it's relevant also to their statements. The Latin American development experience, the early development experience of the 50s and 60s failed not because they had the wrong idea. It's because the sequencing of strategic investments was not right, and the scale was not right. You can't industrialize in a country that has an internal market of 20 or 30 or even 40 million consumers, because you can't reach those economies of scale. So what you end up doing, you end up in an assembly line manufacturing. So we get the illusion of industrialization because you see containers coming and going, and you see factories and workers, and you see actually high quality products coming out, but you don't realize that the content was mostly not produced there. So the type of industrialization that was pursued was not right, but also we've lost track of, pillars of resilience that we had that we were losing while we were trying to industrialize. So the food sovereignty story is extremely important, because the rules of trade that were introduced in the 60s with the common agricultural policy in Europe and the rules of GATT, the General Agreement on Trade and Tariffs that led to the WTO, the common phrase at the time was from the global north. They used to say, we believe in free trade in everything other than arms and farms, that is agriculture. And that's what killed food sovereignty in the global south and replaced it with this concept of food security. Food security means you can secure the nutrition of your people, either by producing it or by buying it or by borrowing money to buy it, or by getting it as food aid from US aid, for example, which is how you kill agriculture in the global south and make the global south food dependent. So as we were busy trying to catch up on the industrial front, we lost agriculture. And as we were busy, catching up with the wrong kind of manufacturing, the low value added manufacturing, we didn't realize that we're becoming more and more energy dependent. And that got us into the debt trap. So there were serious mistakes that were made. That's why in my presentation today, I insist on the key areas that would lead to actual industrialization and transformation. Now, of course, the idea that the state will do everything and everything is fine and dandy in terms of class relations and all that, I didn't have time in my 7 or 10 minutes of remarks to address that. But of course, that's part of the struggle, right? At the national level, at the continental level, that as you do this transformation, you have to include the rights of workers, the rights of peasants, the rights of farmers, the rights of women, indigenous people in this transformation, because it's not purely an industrial transformation or economic transformation. This is a social transformation, cultural transformation, ideological transformation. And that's why we're talking about narratives today. And building this from the grassroots is the best way to move into this transformation. Don't expect this to come from the African Union or from a president in any particular country. This has to be a true decolonization project that was interrupted intentionally in the 50s and 60s on this continent.
Thank you, Fadhel. I would also just like to have any of the other speakers comment on Jeanette's question, and possibly also, oh, you guys have your hands up. Eric, you can go first.
I'll just take a slightly more contrarian view than Fadhel about the BRICS in particular. Again, the BRICS has been around for 10 years and doesn't really have a lot to show for it other than a mid-level bank. There is a structural problem in the BRICS, which is that India and China hate each other and have tens of thousands of troops massed along their disputed border. We can't ignore that. The BRICS, India will never tolerate a BRICS currency because it will be under Chinese central bank control. We can go down the line of the things that can't happen because of the BRICS, and the BRICS expanding now to 11 countries with Argentina on the way out. Generally speaking, groups don't get more efficient and more effective when they get larger. So if BRICS wasn't able to accomplish much at 5, they're not going to accomplish much at 10 or 11. Now, here's the important thing about BRICS, and I think Fadhel may agree with this. We live in an era of grievance-based politics. The grievance-based politics shapes our politics, it shapes Europe's politics, it shapes China's politics. And grievance politics are very important. And what we hear coming out of the BRICS is we have had enough. We are fed up. We want something different. And that grievance needs to be listened to, or else it will manifest itself in all sorts of toxic ways as it has in our country. But I think to look to the BRICS as some kind of European Union style, effective bureaucratic delivery of policy just isn't rooted in there's no evidence to kind of back that up in that respect.
Thank you. I'm gonna go to Ms. Han.
Me?
Yes.
Okay. Yeah, I actually just want to support. I support Fadhel's point, but I also agree with Eric that we cannot probably just place our hope on BRICS. But I think the general hope that in some ways we need to have parallel structure. That's something I really want to support. And I think in some ways, think of China. China has quite a bit of experience in having parallel structure, because in terms of both in terms of manufacturing, but also in terms of a lot of the media infrastructure, China does have a parallel structure. So I think some of that experience will be quite helpful, I think. But on the whole, I also agree that it's not something that it's a question for the states to claim to have a vision. That transformative vision has to come from the society, come from social transformation as well. So how do we have that collective will and political transformation? And that's something probably we have to look at larger sort of the sphere of the global South instead of pinning hope on a few countries. But how to mobilize that, it's a very large project.
All right, thank you very much. Sorry.
Well,
this is the next question.
Maybe I could just add a very small point here. And that is that the idea of Pan-Africanism was quite popular at one time, decades ago, and it's fallen by the wayside. And it's often seen as an impossibility. There are just too many conflicting interests. It's too difficult in terms of the existing political structures in the individual African states and all that. But I think if you look at things in the long term, all kinds of things which were thought about as impossible after a period of decades actually came to fruition. And of course, they came to fruition as a result of political will, of strenuous organization, and also the absence of any other path that would lead to some profound political and economic transformation. So I think revisiting Pan-Africanism and thinking about whether it can actually play a significant role is something that should be put back on the agenda of political thinkers, not just in Africa, but also in those parts of the world that wish Africa well. And I think China is actually one of those parts of the world that does wish Africa and the global South well, because Chinese leaders have the idea that China's own development is very closely tied to global development, and that China actually needs the global South, the other parts of the global South, more than the other parts of the global South need China. And also, China's view is that development is not a zero-sum game. That's the US view. Rather, China's view is that there has to be some kind of overall coordination, particularly among the countries of the global South, in order to advance both economic and political projects. And I think that's something that has to be borne in mind in evaluating who are Africa's friends and who are Africa's enemies, which is always an important question, not just for Africans again, but for people in the world at large.
Thank you very much. Our next two questions, first is going to go to Eric and then Jan. Eric, you spoke a lot about data and facts, and this is a question from David Tashimba. Why do you think Blinken and the rest of the folks in the imperial establishment are not interested in data? What do they lose in such a disinformation game, and what do they gain?
There's a huge discrepancy, specifically in the United States government, between the operational staff that work in the field, that access information, and that, that actually do the technocratic type of tasks. You'll find in the State Department, for example, a lot of people who really immerse themselves in all the research and all the data and are very nuanced about it. There is a fundamental problem, though, in the State Department, is that as you go up from the first floor to the seventh floor where the secretary is, the air seems to thin and the stupidity level seems to go up. And so what ends up happening is the first through fifth floors are the operational staff. And once you get to the sixth floor, you start getting into political staffs. Those are the political appointees. And by the time you get to the seventh floor where the secretary is, you're deep into politics. And the American body politic today is not a place where nuance thrives. And so for them, political expediency tends to kind of lend itself to be much more anti-China and to reject the data. That also being said, there's an interesting phenomena that happens. There's a big gap between the kind of the deep state, if you will, and the political appointees. They don't talk to each other a lot. And so this is one of the reasons why in Biden's speech 2 weeks ago, the debt trap reference kind of gets put in there, because the national security staff is oftentimes referring to media to guide a lot of their narratives than they are actually using their own intelligence. And so it's just there is a difference. By the way, the US government, like the Chinese government, are massive organizations, and there's a lot of diversity within those organizations. So I would encourage you to have a nuanced approach even to how they approach these issues, because you'll find quite a bit of diversity within those two organizations. I will also make the same argument, by the way, that my interactions with Chinese government leaders are more or less the same. They traffic in the same kinds of simplistic tropes, reductive. I just met with a senior delegation in Johannesburg last week. They weren't better informed than the average American political leader either. So this is not uniquely an American phenomenon either.
All right. Thank you. I think this is actually a perfect time to also kind of go into your other argument, because some people were asking, what is the political importance then? Because you said Africa is not so much economically important to China, but there is a lot of politics involved.
Right.
Could you?
This is the most underexplored part of the China-Africa relationship, and it's the area that Fadhel talks about, which is so important. The African governments and African people, for the most part, for the past 400 or 500 years, in many ways, are the battered spouse of the international system. They have been abused and they have been denigrated, and they have been told that the only value that you bring to the international order is what comes out of the ground. And so the currency in international diplomacy for many African leaders today is still to trade off of resources. That's what people want from us. The problem is that China rolls up into Africa and says, you know what? I don't really need what comes out of the ground. And Professor David Shin, or Ambassador David Shin at George Washington, and the former US ambassador to Ethiopia, he has this interesting kind of chart where he shows in 2008, almost a third of Chinese oil came from Africa, Angola, South Sudan, and the Republic of Congo. By 2018, that number was down to 18%. This year, it's below 8% and falling even more. We can track that on timber, on most minerals except cobalt and others. And so China now rolls up and says, I don't need what you've got. What I need, though, is I need that block of votes. As Fadhel talked about, Africa, more than any other region, tends to vote as a block at the United Nations, at the Food and Agriculture Organization, at the World Health Organization. That is incredibly valuable to China. At the FAO in particular, in the last election, the African bloc lined up behind the Chinese candidate for re-election and forced the US candidate out on the first vote. And that is the value. The problem is African countries still are not leveraging that. So when Haikinda Hichilema went to Beijing, and he is under enormous debt pressures, he did not say, listen, President Xi, you need me, I need you. You help me on the debt issues. You help me on some of these other political issues that I need, and I'm going to make sure that I help you on some of your political issues. They're not having those conversations right now. And that's a real missed opportunity for Africans. These African leaders know how to play politics because they play brutal politics to get to where they are. But with China, they don't. And that's something I hope that will change, because they have a lot of power that China relies on.
Thank you. Thank you. No other comments? Okay. All right. The next question is for Jan and Barry. What differences, if there are any, between the Chinese state versus the private investments in Ethiopia and elsewhere on the African continent? And what are the differences between these investments and Western foreign direct investment?
Well, one of the differences between state-owned enterprises and privately owned enterprises operating in Africa coming from China is that the state-owned enterprises are required to take into account precisely these political factors, which Eric just alluded to. That is, they are directly responsible to the Chinese central government or to provincial level entities. They have to take into account China's policies, and particularly they have to do nothing which will cast China in a bad light in relation to African countries and peoples. Privately owned enterprises are governed to some extent, but to a much lesser extent, by their relationship with the Chinese government, and therefore are inherently less responsible in terms of in political terms. And you could see that a lot of the Chinese companies which have gotten into trouble in some way in Africa with African governments, with African people more generally, have been privately owned enterprises. And they constitute 90% of all the Chinese companies operating in Africa. Of course, the state-owned enterprises from China operating in Africa tend to be involved in much larger projects than the privately owned companies, but there are some significant privately owned companies from China operating in Africa, and they're the ones that create headaches for the Chinese diplomatic representatives. One of the companies that we once looked at some years ago, Column Coal Mine operating in Zambia, they made themselves infamous by being involved in a shooting against some protesting workers. They were a privately owned enterprise, and the Chinese government tried to call them to account. They actually held a meeting with the head of that company. He had to come to the Chinese embassy. He had to appear before about 200 Chinese who were involved in businesses in Zambia, and they strongly criticized him. So it's something that the Chinese government will try to do, but whether they're successful in changing the operating procedure of private companies is another matter. They only have so much leverage in that regard. But it still is rather striking that the Chinese government even tried to do that. It's not something a Western government would do at all with regard to the delicts of private companies operating abroad.
Chinese state-owned enterprises, which are also very prominent in Africa, they have certain kinds of political obligation to really follow the policy of both the Chinese government and also the policies of host government, and also try to align their development plans with the development plans of the host country. So they do have certain political obligation to do that. Now, at the time of business as usual, they also function as market entity. That is, of course, they engage the normal so-called normal market, relations, and in the sort of, the employment relations. That's also very typical of other enterprises. But at the moment of crisis, economic crisis, for example, they have to bear more social obligations. So give you one example, which we have quoted before. Around 2008, when the financial crisis hit the world, a lot of the enterprises in mining companies in Zambia, they have folded. They have stopped investing. They have even laid off workers. But of course, the CNMC, which is the Chinese state-owned enterprise in Zambia, they made a promise of 3 no's. That is, they're not going to cut down on investment. They will not lay off workers. They will not reduce on investment, etc. So this kind of, they provide a certain kind of economic security to Zambian society, and which allowed the Zambian government to have more leverage against other foreign companies, which threatened the Zambian government that if they do not have more this or that they're going to leave, because then they can come back to them and say, well, if you leave, then Chinese companies might just acquire more mining assets. So that's one example. And the other example that Barry was talking about also is a column coal mine. That's also a moment of crisis management, which they not only made the column coal mine owners criticize themselves, but they have to criticize themselves in front of all Chinese business owners. So there's a sort of a community of owners, and then they have to do this. Now, this is not to say, this is interesting. This is to some extent is a legacy of the Chinese Mao era period, that you have to do self-criticism. So not only they have to do self-criticism among the business owners, they actually have to do self-criticism in front of the community, the mining community. They have to apologize. So these are the things, to some extent, it's a political culture, which extended from the Mao period. But of course, these happened occasionally at the moment of the crisis. In normal period, these are still functioning as, market entities. That is, like what Barry had said, basically, sometimes they do, make the break laws, sometimes as private enterprise owners do in Ghana, for example. So there are a lot of these kind of misbehaviors also by them. So I think that's how you might compare between Chinese entities and entities from elsewhere.
Thank you very much. I have 2 questions I'm going to try and ask together. But first of all, this is most of what we've spoken about regarding where African power might come from in this China-Africa relationship, speaks about them as a unified totality most of the time. And we kind of want to go back to these more ground divisions. And so there's a question from Barbara Foley that says, what about the class differences within various countries? Example, Ethiopian. What about class struggles within African nations and regions? And how does China's presence affect these internal class dynamics? I also want to connect this question to another one to Dr. Fadhel, but everyone is to comment if you can. And basically it's saying, you talk about structural transformation, and they're interested in knowing what actions should African elites in political, economic, military, intellectual circles take to ensure development that primarily benefits the people of Africa, as opposed to collaborations with former colonizers. The African populace is very well aware that most of the, especially governmental elites in which this just transition is dependent on, actually don't usually serve in the interests of the people. Most of them are having a lot of, most of them, have a lot of places in Europe, are very connected to Europe. And so that, I guess that is just the general question. Two, what do you think about the class dynamics within Africa, since it's not just a unified totality? And is the problem, would you say, more political mentally than just economic? Sorry if that's a little unclear.
It's good. Thank you. So the elites and their role in the economy and politics in Africa is not new. The elites also served during colonial times and continue, to this day. When we gained independence, we forgot that on day one after independence, we inherited the same governance structure of the colonial powers, and the colonial powers were not democratic bureaucracies or governance structures. So we continued with the same bureaucratic institutional structures, which are colonial, which are top-down hierarchies. We continued with the same economic infrastructure, including the transportation and logistics infrastructure, which is the roads and the railroads that were built, from the mines to the ports to ship to the same, destinations in the global north. So we inherited all of that, and the elites come with it. So, for example, I'll give you the example of food sovereignty. If we get a consensus today on the entire African continent or in a particular country that we need to restore food sovereignty in Africa, and we need to prioritize growing core crops like wheat and corn on the continent as opposed to cash crops, and we commit the resources to it, who's going to be the first group of people to oppose it? It's going to be the 3 or 4 people in each country who dominate the import of rice and wheat and corn in their country. Nigeria tried this a few years ago, and they faced that elite, and they lost because they thought that it's a good thing for the country. Why would anybody oppose it? Of course they would oppose it. Why would you take from their market share? They collect rent, right, by processing the imports for the whole country. And the same is in the energy system, the same for the guys who have the exclusive import license for pharmaceuticals, for medical equipment, for everything in the country. There's a small group of elites, sometimes connected to the government or to the military, and they have no interest in giving up that market share that they have, even though it's in the interest of the country to become more sovereign, more independent, more developed. So we can't have these grand plans to introduce a Pan-African industrial policy and food sovereignty and energy sovereignty without recognizing that there are internal power structures that are class-based, that are colonial, that need to be dealt with in advance. Otherwise, we're not going to go. And this is before you get to the power and influence of the outside world. These are the internal elites. So that's why this decolonization, vision that we have is not something that political leaders at the top need to introduce, because they'll fail miserably. It's an entire transformation of the public discourse about power, about class, and about these structural traps that are inherited by colonial structures. I mean, we have these conversations sometimes when people, you know, throw their hands and say, "Come on, colonialism is over. Come on, this can't be." You know, let's move forward. You know, the world is different today, but people don't even want to have these conversations when we're talking about structures that persist and that create these issues. So absolutely, I agree with the colleague who asked the question that these are very serious parts of the decolonization. I mean, education itself needs a decolonization, you know, agenda. I mean, I studied economics for 4 years in Tunisia, right, in a very, you know, selective educational system and all that. If we didn't have a national holiday called Independence Day, I wouldn't have known from my education that we were colonized, that colonialism was alive and well in economic structures. I learned about the US and Japan and France and all kinds of financial crises all over the world, and I didn't learn about my own country and its own history and its own economic history that was still alive and well. And this is not unique to Tunisia. This is across the economics curriculum and the curriculum in other disciplines across the continent. We just don't have these conversations intellectually in universities, let alone in the public discourse, about the interrupted decolonization project of the 1950s and 60s.
All right, I apologize. I should have said this before, but thank you very much for this is going to, we're running short on time, so these are going to be like your final remarks. I'm sorry I didn't tell you that before. We're going to limit the rest of the speeches to at least around 2 minutes, and just any commentary based on that question that we previously asked, or just general final remarks. So for each of the last speakers. We can start with Eric, since you're right there in front of me.
Biggest problem facing the China-Africa relationship today in Africa is the lack of China literacy by all levels of African society. Not only is there no China competency in African governments, and this is up and down the continent. There is no China competency in the media. There has been no expansion of the Chinese academic regional studies in African universities. And this is doing them considerable damage, because the Chinese have improved their knowledge and their literacy, not at the African level, but at the national level and at the subnational level. You will see African Chinese negotiators now speaking Igbo, Hausa, Kiswahili, Lingala, coming to negotiations with people who know nothing about them. And I will say it's even worse that not only are in so much of the African discourse about China is not only not current, it's old, because China has changed so much in the past 2 or 3 years. They are still thinking that China is the China of 2016, 2017 of big budgets. And we saw this with Kenyan President Ruto's visit to China, where he went with $1 billion request, which was, again, not grounded in reality. So it's an urgent need to improve China literacy in Africa today.
Barry, you can go first.
Okay, well, I'll say something about the whole question of the attitude of China and the Chinese entities that are in Africa about class. First of all, I would say that if you think that China is about to do something that is radically transformative in Africa, I think you have to think again, because actually the Chinese government has vainly constructed ties with political and economic elites in Africa. And its contacts with Africans at the base level, while maybe stronger than some Western countries, still have a lot to be desired. And that is something which probably is not going to change anytime soon. Although there are some inklings that some Chinese entities do have some consciousness that ties have to be established not only with the elites, but also with workers, with farmers, and with other people at the grassroots level. And you can see just a few examples of where that's done. When we were in Zambia doing field work, one of the projects that interested us was a project to build solar hammer mills. These are mills for basically grinding maize and creating mealie meal, which is, of course, a staple in Zambia. And a Chinese and a Zambian got together basically at the grassroots level and came up with the idea of building thousands of these very small mills, putting one in each village in Zambia, grinding the maize, cutting out the middlemen in terms of milling, and being able to produce mealie meal at a much cheaper price. So this was an idea which they sold to the Farmers Union in Zambia, which took charge of the distribution of the mills at the village level. So this shows a little bit of consciousness of the needs of grassroots people, and is a small step away from having ties between Chinese and Africans, at least at the political level, be exclusively among the elites. And I think we have to talk more about these kinds of small steps, and of course, try to promote more consciousness on the part of both Chinese and Africans that's based on ideas that are not just connected with the elites, but connected with the mass of people who in both China and in Africa are, of course, the Lao Bai Xing, as Chinese would say, the common people.
Okay, I just want to, I know the time, we're running out of time. I just want to add one point that we have in our discussion, we have tend to see China being here, Africa being there, and China is an investor and Africa is a recipient of investment. But we haven't really discussed much about the structural similarities between China and Africa. That is, China is also, that is a lot of the global dynamics which we found in Africa is also highly found in China. I'll give you one very quick example. For example, Ethiopian farmers get maybe 1 to 2% of their final the retail value for their coffee, for the coffee they grow. And Chinese workers, they get their labor component is about 1 to 2% of the Apple phone, for example, or the iPad. So in some sense, structurally speaking, Chinese workers have the similar position as Ethiopian farmers in the global value chain. So that kind of similarity and that kind of connectivity to some extent is something we have not discussed very much. And that's something that in the future, perhaps more research should be done. Barry mentioned, grassroots level connectivity, but we also talk about, we can also do more research about structural similarities of peoples in Africa, in many parts of Africa, and also in China.
Thank you very much. I will pass it on to Ying, whoever's next.
Sure. Thank you so much. Thank you so much, Michael, for facilitating the discussion so well and so smoothly. And thank you so much to all the speakers today. I have learned a lot, and I really appreciate your generous sharing of your work and your thoughts on this topic. And we can see there are still some disagreement even among the panelists, which I think is really healthy and productive. And it really demonstrates the the complexity of this issue and the urgency for all of us to learn more about it. And I think it's really on us and also on people in the audience to work towards, demystify some of the hegemonic narratives and try to create alternative narratives and frameworks for us to understand this question. Karina, would you like to also make some remarks?
Yes, just to add that, yeah, thank you so much to all of the participants for your really informative and compelling presentations. They've given us so much food for thought, and will also help to inform our discussions on the next panel. Included so much rich, contributed so much in terms of rich empirical and theoretical tools to help us to challenge as Ying was saying, these hegemonic narratives, and to think through in different ways about the prospects for African development that breaks from the unequal exchange that has, marked Africa's relations with the global North, resulting from centuries of colonial, neo-colonial wealth train and exploitation, and that could, African development, which could potentially benefit from the role of Chinese direct investment if leveraged by African states in a way, I think, as many people many of the panelists have discussed, in a way that focuses on the needs of the working class and peasants, and breaks from the sort of colonial capitalist model of development that has enriched both external foreign interests and domestic elite, and also about the role, also have helped us think through the role of class formation internally within states, and the role of Western-oriented African elites, and how their interests may articulate, how they articulate with capitalist core interests, undermining class struggles on the African continent. We also heard about the legacies of Mao on Chinese political culture, despite the rise of market logics, and how this may continue to shape China's economic relations with the African continent. And also many examples, challenging narratives about the so-called debt trap, the impact of investment on African workers, structural similarities between Chinese and African economies, and how crucial it is to decolonize our concepts and approaches to studying the global political economy in general, but more specifically in terms of how we can build a more accurate understanding of these crucial themes of China's relations with the African continent. So I thank you all for your excellent contributions, and I look forward to continuing the conversation in the second part of our panel. Thank you so much.